Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Thursday, December 5th, 2013. After trading down below the prior day's low at 1784 during yesterday's session, the S&P sold down to a new low at 1778. As we noted in yesterday's recap, climactic selling was transacted at the low. Following the sell-off, a short covering rally developed and the S&P traded back up through the trading range, auctioning up to 1796. In the overnight session, the S&P sold down from the high. During the overnight session, the S&P sold off from the high and pulled back to 1786 at today's open. There was a retracement back up to 1792, at which point the buy programs ceased and the market traded back down through the trading range and made a modest lower low, trading down to 1783. On the subsequent retracement up to 1790, buying interest faded again, and the S&P once more sold back down to the low and made a modest lower low, trading down to 1782. The general slope of today's distribution was lower. However, the market traded within the parameters of yesterday's trading range. At the open, when the S&P initially traded up to 1792, there was statistical high volume selling during the opening range session. During the second retracement up to 1790, there was statistical high volume selling at the high as well. Later in the day, when the S&P traded down to 1782, 1783, there was statistical high volume buying at the low. Coming into Friday's session, we would expect to see support hold at or near today's low at 1782. In the event selling pressure increased, yesterday's low is located down at 1778. Resistance is up at the 1800 price level, with minor resistance located at the overnight high up at 1794 and yesterday's closing range high up at 1796. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.